Every chart tells a story, and today we are looking at one that has finally started to show early signs of strength after months of pressure. This is SHA, and the coin we are analyzing is Pengu, currently priced at $0.012. The overall market environment has been shifting into a more balanced state, and that makes this chart even more interesting because the structure is finally aligning with what we want to see on both the higher and lower time frames. When we shift to the weekly chart, the first thing that stands out is the long and exhausting downtrend that carried the price deeper week after week. But eventually, every trend reaches a point where the selling pressure begins to weaken, and Pengu found that moment when it tapped the weekly order block. It reacted exactly where strong buyers stepped in previously, and the price touched the upper boundary of that zone before pulling back slightly. What makes this important is not the touch itself, but the respect shown afterward. The weekly order block remains valid, and as long as price stays above its upper region, the broader structure holds a bullish bias, even though long-term momentum still needs confirmation. Moving to the 4-hour high chart gives us a clearer and more detailed picture. After the tap into the weekly zone, the 4-hour structure began to shift. The previous lower high that had been controlling the trend was finally broken. This break of structure serves as the first meaningful shift from bearish control toward bullish intention. A break of a lower high does not guarantee a full reversal, but it is always the first requirement. What happens after the break is equally important. Price moved into a period of sideways consolidation, which is a sign of stabilization rather than rejection. Within this consolidation, we can trace a clean support at $0.010, which is also the same region that reacted strongly on the weekly order block. This alignment between time frames strengthens the argument for bullish continuation. When support forms directly on a higher time frame demand zone, the probability of a bounce increases, and once again we are seeing the market respecting that area even after multiple tests. The next key area above is the resistance at $0.0132. This level represents a strong bearish order block, and it is the first point where sellers previously stepped in aggressively. Because of that, we need a clean break above it with strong bullish candles to confirm continuation. If Pengu manages to reclaim this resistance, the path toward higher targets opens smoothly. Until then, the price remains inside a controlled bullish range where buyers are in charge as long as the support does not break. To sum it up, Peng is finally showing a structured recovery. Weekly support respected, 4-hour break of structure achieved, sideways stability maintained, and the trend leaning upward as long as the $0.010 support holds. If you are following these updates and want more clean, emotion-free breakdowns like this, stay tuned and keep learning from the structure the market gives us every day.